Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to talk about potentially what's going to happen on Tesla earnings, how that could affect the markets, where the key levels are for not only the S&P 500, but as well as stocks like AMC, go over the Ortex data for AMC as well as the S&P 500, and talk about this parabolic move that we're seeing in the bond market and potentially why right now could be such a massive opportunity. So let's get straight into it. If that did not spark your interest, then this is not the video for you. If you do not like to make money, this is of course not the video for you, because we are right on the cusp of a big move either to the upside or the downside, and I am going to make my case to you guys for why I think it will be an upside move here in this video. So let's get straight into it, guys. First things first, S&P 500 down about 1%, which, granted, what is happening in the marketplace today, not only America, but throughout the broad world, essentially, throughout China, Europe markets, we should be down a lot more. That's just the honest truth. With bond yields up in the way that they are today, the markets should be down 4% possibly today, because we're seeing bond yields now sharply rising above 4%, which 4% on the 10-year bond was seen as kind of that level. If bond yields just didn't keep going up, if we didn't break above and gap up above 4%, that was seen as the level to maybe we should be a little bit more bullish. Maybe we're going to see a cap on these bond yields, but that absolutely did not happen today. You broke above 4%. Now we're at 4.115% on the 10-year bond. Why that's so important is because now bonds are pretty attractive for a 10-year bond if you're getting paid out 4.11%, if you think inflation will go down over the next 10 years. And I think people do expect inflation to come down over the next 10 years. So there's really competing asset classes here between stocks and bonds look to be winning here today. And the reason for this bond move to the upside is the fact that the UK has now seen the highest levels of inflation in over 40 years. They were expected to get a CPI reading at 10% for September. It came in at 10.1%. So it's not a huge, upset to the upside, but it still was higher than expected, even though 10% CPI for September is still super, super high. So that is what is causing the bonds to make a move up. In other words, investors are expecting the Fed to raise rates more aggressively, because if the UK is seeing this kind of inflation, well, what's going to stop America from seeing this kind of inflation? And also at the same time, given what's happened in the UK bond yields, given the new regime of government over there with, fiscal monetary policy, what's the end game to this? If the UK can't get inflation down and they have to stimulate somehow, well, that's going to just cause more inflation. So people are going to need to get paid a higher yield on those bonds. So there's a lot of different details of, what's actually going on in the UK that's affecting our bond market. But long story short, it's their high inflation report that really, for the main part, is causing American bond yields to skyrocket. And in the past, over 2022, anytime we have seen bonds really go up, 10 basis points in a day or more, in which we're 11.5 basis points higher today, you have seen over 3% drops in the markets. And especially once you break out of key levels, right? 4%, like I said, was a very key level. You're not seeing that drop. That is a good thing. It's because of Netflix earnings. Netflix earnings were so good that people are saying, hey, it's the growth trade might still be on. Maybe fundamentals can hold up in this marketplace when the Fed is just raising rates to oblivion. And Netflix stock actually got 2 upgrades as Wall Street says it's time to buy. So that was a good thing. What you're seeing in the bond market is a bad thing for the day. They're kind of counteracting each other a little bit. I think if Netflix earnings were really bad, the markets would be terrible today, down 3, 4, 5%. That would be my guess on what we could have expected to see. Now, as far as earnings, obviously, guys, we have Tesla earnings here in after hours, and that's going to be probably the most important earnings, definitely of this week, because Tesla is a large part of the markets. You also have IBM, a couple other large companies that do report earnings here in after hours. But why Tesla is so important is because in the grand scope of the Fed raising rates, a recession, the auto industry is no better bellwether to what's going on in the economy, right? When the Fed raises rates, that affects automakers, I would say the most, right? Home builders, automakers, those guys get affected the most because those interest rates pretty much instantly go up, almost in a 1-to-1 ratio, if not a 2-to-1 ratio to what the Fed is doing. Also, if the consumer gets weak, the last thing they're going to do is buy a vehicle. Now, we already know Tesla's earnings, well, not their earnings, but their delivery numbers were really, really bad, right? Their last month delivery numbers were worse than expected, but that's a good thing in regards to Tesla earnings because we're already expecting, them to have a lower delivery number. So now the question is, what do their other business numbers look like, right? Solar business, energy business, so on and so forth. How are those numbers? How is Tesla, keeping their margins high? Are they keeping their margins high? These are questions that investors will get clarity on coming with Tesla earnings as well as their earnings call. Now, I will say though, Tesla has had a high bar throughout all of 2022. So when you have a high bar, even though we know the delivery numbers, what are those vehicles selling for? What's the actual revenue number? Do they miss that number? Do they beat that number? Usually it's a bad bet to bet on Tesla. And I'm going to say, since we already know what their numbers are and Tesla stock has fallen so much as of recently, a lot of the bad news is already priced in. On the other hand, if there's something we don't know about, if Elon says on the conference call or says whatever he says, right, can be unpredictable. If he says something along the lines of he has to sell X billion more dollars worth of Tesla shares to fund this Twitter deal, I think that is one of the things the markets don't fully understand. They can't price in how much stock he will have to sell. If he says he's going to have to sell more, that will put a hamper on any good earnings numbers that comes out of Tesla. I think that is the single most important thing because I think it's clear to say Tesla's probably going to have good numbers because we already know their deliveries. They didn't miss on deliveries by a whole lot. I think it was a couple thousand vehicles, nothing too crazy in the grand scope of Tesla delivery numbers. So that's going to be the main question. If Tesla has good earnings, I think investors will look to say, hey, this is more evidence that we should probably be bullish on the markets, bullish on some of these growth stocks. Now, nonetheless, as far as the option positioning in the S&P 500 as of right now, you're sitting at a positive order value of 82%, meaning for all of the dollars, all of $403.41 million that have went into S&P options here today, 82% of those dollars have been bullish. That, in my opinion, is a very, very good sign. Anything over 50 is typically good, but 82%, that's really good. And I think that's partly why the markets are holding up better than one would expect given the bond yields going up, given the dollar on a parabolic rally. We'll talk about that as well here in a second. But in total, you do have a lot of negative option positioning into this Friday. So if these 64.81% of the puts on the open interest side, if they are proven wrong, if we can get a bullish reaction, you're going to see a flood of people going out to buy stock to cover on some of those short positions, and you will see a short squeeze. The markets are very day by day, right? Meaning, even if the UK had 10.1% inflation yesterday, or in this case, I'm forward looking here, if the markets say, hey, that happened yesterday, but earnings are still really good, bond yields hopefully come down tomorrow, well, that will give us a short squeeze. Trading algorithms, they have already showed us that there's going to be a lot of support around this 200-week moving average, something we just bounced off of that was yesterday. So either way you put it, I think you get a move down to 350. That would be a move down of about 5% from here, or you get that move up to about 386. That would also be a 5% move from here. A lot of people, Morgan Stanley, some big bears are talking about a 10 to even 12% rally in equity markets as long as earnings are good. Now, as far as AMC stock, AMC is very attractive here on a risk to reward basis because the stock has fallen so much, because there is a community behind AMC and there is a very high short interest. It makes me look at AMC a little bit differently, because I think if we get a market-wide short squeeze, if we get, stocks just squeezing left and right, the broad markets up 2, 3, 4, 5% in a day, well, I think AMC is going to be a big beneficiary of that, right? And as far as right now, we have an estimated short interest of free float at 19.14%, free float out on loan at about 36%, shares out on loan 185.11 million, days to cover 4.65, cost to borrow 19.63%, and a 100% share utilization. So things are looking pretty good as of right now. If we look at the cost to borrow max, that is at 26.5%. It's been relatively unvolatile over the past couple of days, and I think that's a good thing, that it's not really bouncing around a lot, but it's staying at these very, very elevated levels, guys. Now, last thing that I do want to talk about, well, two things, is the dollar. Obviously, the dollar is up 0.75% on the day. That is another thing you should look at and say, hey, if the markets are only down 0.5%, give or take, by the close, that's probably a pretty bullish thing, because when the dollar goes up 1% and bond yields spike 11.5 basis points, historically speaking, throughout 2022, those have been our 3, 4, 5% down days on the equity market. So to put it into context here, we're looking pretty bullish overall, given even the bad news that we have seen. Now, as far as AMC's actual indicators and the, pulled up the wrong one. Didn't mean VWAP. Need the RSI, just 1 second. Oh my god, it won't let me pull it up, but I'll tell you right now, everything is oversold on AMC. The MACD is oversold, the RSI is oversold, AMC is hanging out at a low right under this resistance level that it looks like we seen yesterday at about $6.90 per share. So I think if we can break out above that level, then you're probably going back close to about $9 per share. And like I said, if a market-wide short squeeze starts to happen because of great earnings, well, I think AMC will be a big beneficiary of that. And now you're at pre-squeeze levels according to a lot of analysts. If we take a look at this, it says AMC stock sinks to pre-meme stock levels as B. Riley slashes price target by 32%. Things like this happening, the positioning that we're seeing as far as the stock and what has happened, I have no choice but to be pretty damn bullish as of right now in AMC, as well as the broad markets, at least until the Fed breaks something and something snaps in the markets, or until earnings completely fall apart. It's hard to be bearish right now. It's hard to be bearish heading into a historically very bullish midterm. So guys, that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comments section. Thank you guys for watching. If you guys want to get access to all of my trades in real time, join a great trading community, link down below in the description, and get yourself those free stocks with Webull, Moomoo, and Public, also link down below in the description of this video. You guys enjoy the rest of your day. I will see you in the next one.